we're in a situation now in the United States and really the developed world where we have so much debt. You have to understand that we're in a debt-based monetary system. So that means that when you go and get a loan, a house, a car, a boat, a motorcycle loan, that money is created into existence by the issuance of that debt. And so they are going to give you a loan for the $8,000 to buy a motorcycle, and you're going to take that $8,000 and go give it to somebody. So those dollars were created out of thin air, and the dollars are a liability. The debt is the asset, the boat, the motorcycle, that asset. Okay. But here's the problem. If this becomes a deflationary crash and the asset prices start to fall, then those assets that are being used as collateral are no longer good. And so then whoever has these loans have to post up more collateral. And this becomes what's known as a death debt spiral. And we're there. Talk about this all the time. And we're witnessing basically a showdown between the Fed, the Federal Reserve, the Central Bank of the United States, and the US Treasury, the government. And the government, the Treasury, is spending so much money, issuing so much debt that there's not enough appetite for that. And unless somehow miraculously the US government cuts their budget by 50%, which probably has pretty much a zero chance, a 0.0001% chance of happening, then the Fed is going to have to stop tightening. They're going to have to stop selling these treasuries into the market, and they're going to have to start to do quantitative easing. They'll probably call it something different. They have to buy these treasuries. They have to lower rates. I've talked about this extensively, why this has to happen. Janet Yellen, the head of the US Treasury, the government, she said that rates would average 1% of GDP for the rest of the decade. And I broke down the math of how you'd get to that. And that means that the Fed funds rate would be less than 1% on average for the rest of the decade. All right? Rates are coming down. Fed's going to print. That's what's going to happen. If they don't, if they choose not to, then the whole thing falls apart. And the corporatocracy, if you will, corporations and the bankers that sort of control and run the world will all get wiped out and they'll lose everything. And they don't want that to happen. No nation with the ability to print money would allow that to happen. They go into hyperinflation. And I've done videos to show how this has changed since 2008 and into 2019, into 2020, and what I expect now. And so what I expect is massive amounts of money printing and more inflation. I've said it over and over and over for the last year. I believe that inflation will continue to rage and get worse through the end of the decade. And we'll probably see in the United States double-digit inflation to maybe even higher for a couple of years. But here's the thing, that will lead to an inflationary bust. Sort of the same thing as a deflationary bust. You're not gonna be able to afford your standard of living. But here's where it's different, all right? Inflation is a double-edged sword. You hear that the rich get richer, right? And the poor get poorer. Why do the rich get richer? The rich get richer for two reasons. One, they own assets. Assets benefit from inflation. The poor get poorer because they don't own assets, all right? So if I own assets, I own a lot of real estate, for example. I own Bitcoin. I own inflation-resistant assets. We'll talk about those. Those will do very good in times of high inflation. If you own no assets, it's not good for you. The other thing is that the rich get richer because they can control their income. They own businesses, and the businesses can raise their prices as inflation eats into that, or they're contractors or whatever, and they can keep their income up with the rate of inflation. That's why the rich get richer. Now, if you want to capitalize, if you want to be part of the rich, then you do the same thing. You own assets and you make sure that your income can go up with the rate of inflation. You can capitalize on it. You don't have to be a victim to inflation. You can actually profit from this. Now, let's just use an example. So in Turkey, for example, the Turkish lira has lost about 95% to the US dollar in 5 years. So if you lived in Turkey and you had a time machine, what would you do? Well, I'd go back 5 years and I would get rid of all my Turkish lira and I'd buy US dollars instead. Okay, that's one way. Now, a better way to do it would be I would take on as much debt in Turkish lira as I could, and that way my debt gets inflated away. Then I can pay it back with dollars and it's lost 95% of its value. That's what's happening. That's how you win in an inflationary environment that we're witnessing right now. Why? I have debt and I have assets that will go up. Now, if you're preparing for a deflationary crash, what's happening is you're in cash and you're sitting on the sideline. You've seen Michael Burry, famous from The Big Short, last November, tweet, sell. January, he tweeted, sell everything. And he deleted his Twitter account. All these people telling you the crash is coming, sell your assets, go to cash. And you've been sitting in cash and the stock market's up 20, 25%, depending on what market you're looking at. You've lost money by sitting in cash, all right? So if you're preparing for a deflationary crash, like 2000, etc., then you should sit in cash. That way, when asset prices drop, home prices go down by 50%, etc., you can go buy more houses. But what if the asset prices don't go down? You're sitting in cash and the asset prices go up. Then what happens? What happens if you sell your Bitcoin today? What happens if you sell your house today, hoping for a better price in 3 years, but you don't get a better price, instead it goes up? What happens if you don't own any assets? Let's say that you're a millennial and you want to buy your first home. Well, I'm not going to buy now because, it's too expensive. Rates are too high. buy and my down payment doesn't buy me enough. So if I wait 2 or 3 years from now, I could buy a bigger house for the same amount of money. But what if home prices go up by 50% like they just did over the last 36 months? Don't think it can happen. It did. Then what happens? Well, now you're buying an even smaller house. You see, a lot of the reason I broke the whole real estate market down like a week or two ago. Go check that out on the podcast Mark Ma Show if you want to get that math. But I showed why the real estate market isn't crashing. And I explained how one of the reasons why is most of the existing homeowners have equity. So when they sell their home, they can go buy another home because they have hundreds of thousands of dollars of equity they can just put down. But if you don't own a home, you don't have hundreds of thousands of dollars of equity, it's very difficult. And all you'll do is fall further and further behind, missing the proverbial boat, so to speak. A deflationary bust would be better for most people. If all the asset prices dropped by 60, 80%, then it gives all the millennials and everyone a chance to get in at a better price. But if they don't, if they just keep going up, there is no better price. And unfortunately, that's what I believe is coming ahead. Now, you can prepare yourself for this in multiple ways. One, you want to buy assets that are scarce. Okay, this is a Van Gogh painting. This is Bitcoin. This is lakefront or beachfront property, scarce assets. Two, you want to buy energy intensive assets. These are commodities, gold, oil, wheat, things like that. They take a lot of energy to produce. You do not want to hold non-scarce and non-energy intensive assets. These could just be equity, speculative plays. It could be just random rural real estate. And two, most importantly, you want to make sure you're protecting your income. As a matter of fact, I just launched a brand new product called Capital Creators Playbooks, where every single month I give you a $1 million opportunity, a business, a way to make cash flow that you can start with right now, that you don't need money to start. If you want to learn about the Capital Creators Playbooks and how you can get that for free, just go to my website, onemarkmoss.com. Again, that's onemarkmoss.com. Check out the Capital Creators Playbooks. But you need to increase your income, be able to increase your income, and buy the right assets, and you're going to get through this okay. All right. I believe it's an inflationary crash that's coming, but you can be prepared either way.